M.K. Surana, the CMD of HPCL, joining us now to really discuss, the implications of what we've been seeing with regards to the economy as well, and also the business outlook going forward. Lots of key, news triggers at HPCL that we continue to track. Mr. Surana, thanks so much for joining us. So first up, how are the trends shaping up on the GRM front? We understand there is some revival, on GRMs in the region. Just talk us through that.
Yeah, to some extent you are right in the sense that the diesel cracks have improved. MS cracks, which has gone very low at some point of time. In fact, there was one time came when the petrol price was lesser than the crude price in the international market. To that extent, it has come to around $7. Diesel cracks have come above $16. It is anticipated that diesel cracks may firm up further with IMO coming in. That should help the GRNs. But on other products, the cracks are still low, and there is some more improvement is required there.
Okay, one private refiner has recently conducted a deal on fuel retailing on that front, and the government has also made changes in the policy, inviting big players globally in the field of fuel retailing. Does that mean higher competition for OMCs?
Whenever new entrant will come, there will be competition, but all competition should not be seen negatively also, because it will also make us more efficient. It will also help us in seeing our own processes. They will also learn something from us. We will also learn something from them. But at the same time, we also got our own strengths. We have got a better understanding of the market, reach, infrastructure. And we had been in this business, and we have worked in a competitive environment. So I think while a competition definitely does create certain pressures, but we should be having a plan to come up to it.
Okay, so by when BS6 fuel will be available in HPCL? Will this be expensive compared to fuel available now?
No, BS6 is supposed to be rolled out across the country from 1st of April 2020, and HPCL will also do that. Our refineries will be compliant before that, and we will do the dilution across the country to ensure that on the nozzle, BS6 specification fuels are available from 1st of April 2020. As far as pricing is concerned, there is a capex cost which is involved to set up these facilities, to upgrade the refineries. There is also an opex cost to run this new facilities, because they are hydrogen intensive units. Now, whether to what extent it will impact the end price, because the end prices of the fuels are actually benchmarked to international prices. So we need to see that how much is the difference and how does it shape there.
So what percentage of cost will be transferred to customer, and what percentage will be borne by the company?
No, the question is that there is a pricing mechanism where the domestic prices are actually compared and benchmarked to the international prices. But at the same time, the companies are investing money to bring this specification to the country. So definitely the companies also need to ensure that there is a recovery of the cost which they are incurring on running that. Otherwise, it will not be good for the health of the companies also.
Okay, we recently saw a sharp surge in the sector's marketing margins. How are those trends shaping up as well, Mr. Surana?
We are able to align the domestic prices to the international prices as of today, and that is a reasonable margin on the marketing front.
Okay, we're seeing a fall in borrowing costs as rates in the system are edging lower as well. How is it showing up in your borrowing costs, or are we likely to see that more in the coming quarters?
HPCL has brought down in recent times our borrowing costs reasonably. Even our total borrowings had also come down. Our debt to equity ratio is 0.97 right now. And with a judicious mix of the domestic and international borrowings and using different instruments of borrowing, we have reduced our interest costs, and will continue to do this in the future. There are opportunities for doing that with the interest rates softening internationally, and we have explored all those possibilities. In the past, we also had done the US dollar denominated bonds which are traded on Singapore exchange, and it got quite a good response and very good rate as well.
Right. Mr. Surana, wanted to understand how the non-fuel retailing business is panning out and what kind of capex would you have lined up for it?
So while our main business remains as a fuel business, but we have got certain capex definitely for, I won't say non-fuel, but non-traditional fuel, let me put it this. We have got investment in CGDs, we have got investment in biofuels, we are also investing in petchems. So petrochemical is definitely one investment which is coming in the Rajasthan refinery. So we are investing in other than fuel business as well, and which we think that will bring good benefit to the company in the time to come.
Right. Crude oil prices, Mr. Surana, have also come lower in the past few weeks, entering a bear market now. What are your thoughts on the kind of impact that you are bound to see?
Crude prices had been varying off late. In fact, last 3 days it has again started firming up. It slid down substantially before that. So it is moving in a range between 55 to 65 range, let's put it this way. And in near future also I expect it to remain in a range bound, maybe around 60 hovering, depending on the supply and demand side situations. Both the side there are certain developments. On the supply side, you have Venezuela, you have Iran issue, you have got OPEC cuts. On the demand side, you have got US-China trade wars, the economy, world economy, growth, etc. So this, how it plays out, it will depend on that.
Okay, call it the biggest political arrest. We'll get to that in a moment. But Mr. Surana, thank you so much for joining us this morning and discussing the latest there with us. Good chatting with you as always.